السلام عليكم ورحمة الله. بسم الله والحمد لله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Before starting the weekly review, I just want to say Ramadan Mubarak to my Muslim brothers and sisters who are fasting this month. Alhamdulillah, الذي بلغنا Ramadan. May Allah accept our ibadat. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday, the 2nd of March 2025. I will start the weekly review. I know I've been skipping weekly reviews in the past, but now we're going to be more consistent because I'm seeing some some opportunities here in the markets. Starting with DXY, you can see DXY. I'm still looking at the sell side liquidity to be targeted. Price has swept the sell side liquidity right there, the sell side liquidity right there, and now we're retracement into this very gap here. We took out last week high here, as you can see. If we go to the daily time frame chart, you can see price has swept that high. Now, some people will be looking at this as a means of a bullish breaker, as a market structure shift, or like a break of market structure. People will be trying to go long here in this heavy gap. They'll be looking at this heavy gap as means to go long, but I'm not looking at this as an opportunity to go long. Pretty much, this is as a turtle soup. So I'm looking to pretty much sell here, go short here, target the sell side with right here. Think of this as means of market maker sell model, something like that. By the way, this day it was about Donald Trump speech. This is why there's this irregularity in this price action. So anyway, that's gonna be pretty much it for the XY. I'm looking for lower prices targeting this sell side liquidity. We have relative equal lows here and this sell side liquidity here. You can look at the rejection block. You can look at the middle point of the discount wick here, which is called the consequent encroachment. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. As you can see, since I want to see DXY running down lower, I'm looking at this turtle soup to go short. This is going to be like I'm trying to go long here on Euro USD, attacking these relative equal highs right there. Above these highs, we have this high, this heavy gap here. So going to the daily time frame chart, you can see how price traded down lower, took out the sell side liquidity. I'm looking at this as means of a turtle soup and going long, attacking the relative equal highs here. You can see clean highs. The market is it's not going to keep these intact. It will pretty much make them jagged. So during next week, I'm looking at this favori gap to be treated as an inversion favori gap that can pretty much push price to the upside. Above this high, above these relative equal highs, we have this favori gap here, this high as well. So that's gonna be pretty much it for your USD, or also known as the fiber. Going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, price has swept the sell side liquidity of last week's candle. We have an outside candle over the this week's candle. It has taken last week's high and last week's low, so we can expect some kind of a consolidation going to next week. Going to the daily time frame chart. Going to the daily time frame chart, you can see our price swept the sell side liquidity here. Now, if price wants to continue running down lower, we have this daily favor gap right there. Price might trade deeper into that daily favor gap and then run up higher towards the buy side liquidity right here. So that's gonna be pretty much it for pound USD, or also known as the cable. Going to gold. Here I'm viewing the weekly time frame chart. I'm gonna be reviewing gold more frequently than not. I stopped trading the indices ES and NQ for religious purposes, but regardless, other than the religious purposes, if you look at the charts now, I'm going to be reviewing the charts later on. You see that the markets on the indices, it's not really inducive for you to be trading. It's not for you. It's not opportunistic for you to pretty much risk anything in that market. So, uh, but pretty much I'm going to be focusing on the gold and the forex market primarily. So looking at gold, here's the weekly time frame chart. We have this candles this week, which is the high of that Fibonacci gap. We traded into it last week. I actually took some trades going short here into that. We have traded into the internal range liquidity right here. From internal range liquidity, if price, I'm not gonna be taking this falling knife when I have the confirmation that price wants to continue from here going to the upside, because we are in a vibogram, as you can see. This is a buy program. And what is happening lately, geopolitical wise, I'm talking between Ukraine and the US and other countries, it is inducive for this market to rally up higher. Because if you remember, every time a crisis happens or something bad happens in the world, gold will rally up higher in a crazy way. Go back through history and read the charts. Look at the charts, try to pretty much match it, compare and contrast when something bad, some crisis happens in the world. Try to look at the gold market. You will see the gold market pretty much running up higher. So think of this that happened this week as means of manipulation, and what happens today, like the last few days between the president of Ukraine and the president of the United States. What happened is pretty much not not ideal. It's not good. So it will pretty much be inducive to the gold market to rally up higher. Anyway, I'm not gonna go into the political things. We have this very gap, internal range liquidity to external range liquidity. So we traded to internal range liquidity. From here, we're looking at external range liquidity. Otherwise, we always look at this manner. If we're in a bear program, buy side liquidity, internal to external and from external to internal. That's the sequence. If we are proven otherwise, it means that the market has shifted from buy program to sell program, and we will be pretty much we will be fine because we got strong and the market has shifted, which means now you can start looking for lower prices. And when the market is consolidating, for some people they have models to trade, and I do have models to trade consolidation, but I don't like to trade consolidations. So just pick your condition. There's a lot of conditions in the market. We have consolidation, we have running up higher, uh, running it down lower. So whatever you excel in, if you excel in trending markets, as I do, I excel in trending markets. Like for example, gold is a trending market right now. Since the beginning of 2025, you can see gold is just running up higher, going to the 3,000 mark almost. So this is what I think price is going to be drawing towards, the 3,000 mark, 3,000 mark price level. But before doing that, we have to go through the sequence of internal to external and from external to internal. So since we've pretty much traded here, we we trade into the internal range liquidity. From internal, I'm expecting price to trade to the external range liquidity, which is this high. Now it might take some time here. It might try to pull some deeper liquidity trade onto here, and that's fine. Here we're pretty much accumulating to take some profits, to take the profits here at this external range liquidity, and keep some runners at the 3,000 price level. Going to the daily time frame chart, you can see from here internal, external. So price has rallied up higher, made a high, traded down lower, took out this low, and traded to the internal range liquidity, as you can see, and then spent some days, spent some time here accumulating, and then we took out the external range liquidity. Price rallied up higher, we took the external, made a high here, price traded down lower, internal range liquidity, and then rallied up higher. Another internal range liquidity, price traded into internal range liquidity, external range liquidity, done. And that's the sequence pretty much. A bit of consolidation here, which is fine. We took external range liquidity here. We have relative equal highs here. Price swept these external right there. We swept these relative equal highs, and then it's just started running down lower, seeking for liquidity as a means of internal range liquidity as a means of fair value gap like that. And we swept these lows here. So from here, we're looking at this middle point of this discount wick. So if price pretty much respects it, not going into next week, we can see price treated as a springboard that can push price to the upside to the extended range liquidity right there. So that's gonna be pretty much it for gold. Going to ES here, I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see price has taken a buy side liquidity right there and started trading the low. We took out this low here. So I'm thinking of this as because we have an S&T here as well. I'm thinking about this as a break of market structure going to the downside. I'm aiming at this low and these equal lows and this low as well. for this sell program that's going to happen. Going to the daily time frame chart, we have this low, we have this favorite gap here as well. There's a favorite gap here, but I don't think price is gonna trade all the way up here because this I'm treating this as a means of a breakaway gap that price is never gonna trade back into. So that's gonna be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, we have an SMT. Price didn't take out the buy side liquidity here on NQ, which means on NQ it is gonna be far stronger to the downside when compared to ES. NQ didn't need to take the buy side liquidity, whereas ES it had to take out the buy side liquidity before trading down lower. NQ it just reversed here and started trading down lower as like, bro, I don't need this buy side liquidity. Let me just trade down lower. I'm seeking, I'm craving that sell side liquidity. We trade down lower, took out the sell side liquidity here. Next, we have this sell side liquidity and this sell side liquidity. So going to the daily time frame chart here for NQ, we have this favorite gap. I'm thinking price is going to retrace here. Actually, we might retrace up here. We have this volume imbalance. Price might trade into that volume imbalance right there, and then break down lower to the sell side liquidity. It depends how strong it is and how energetic it wants to be trading down lower to the sell side liquidity. Now we've been consolidating for some time, consolidating while trading up higher a little bit. So from here, we might just push down lower and take the sell side liquidity energetically to the downside. So I think that's gonna be pretty much it for this weekly review. I really hope you found this one insightful. By the way, just a reminder, we have NFP this week on Friday, 8:30 a.m. New York time. So just be careful when you're trading. Try to pretty much finalize your trading by Wednesday, New York PM session, or like by Wednesday noon. Try to just be finalized with your trading and just stay read and get experience watching NFP from Wednesday noon until Friday 8 a.m. 8:30 a.m. That's gonna be pretty much it for this weekly review. I really hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.